Poised for Exit is a show for business owners who want to achieve a successful exit based on their own terms. Your business exit will likely be the biggest financial transaction of your life, and for most, you'll have one shot at doing it right. The topics and guests we feature and the stories they share will provide valuable ideas and strategies to improve operations and grow enterprise value so you can achieve the best possible exit outcome. Now here's your host, award-winning certified exit planning advisor, Julie Keys.
Welcome everyone to the Poised for Exit podcast show. Our guest today is the CEO of a prominent Twin Cities accounting firm who will share part 2 of her advice on preparing your company's books and operations for a successful exit. We'll hear from her right after these messages.
Are you a business owner getting ready to transition? If so, I recommend True North Mergers and Acquisitions as your confidential strategic partner. They understand your business sale isn't just about one buyer and the price, but what you net that counts. In other words, what you get to keep. When you're ready for a higher level of representation that delivers consistent results, contact True North M&A to do the heavy lifting of selling your business. Learn more at tnma.com. That's tnma.com. Thinking about selling your business in the next few years? Don't wait to start planning. I've seen too many business owners wait too long and regret it. Freedom Financial Partners are financial advisors who specialize in exit planning for business owners, helping you reduce tax surprises, protect what you've built, and quantify how much you need from the sale. Their proven process helps you think beyond your business so you can move forward with clarity and confidence. The longer you wait, the fewer options you may have. Download your free financial readiness assessment today at ffpforme.com/exit. That's ffpforme.com/exit.
My name is Todd Crow, and I'm the president of the Twin Cities Exit Planning Chapter. If you're a business owner and advisor and want to learn more about the world of exit planning, you're invited to visit the Twin Cities chapter of the Exit Planning Institute. You can expect top-level education delivered by subject matter experts at every monthly meeting. Grow your network and draw from the learning that could be a game changer for your business or your practice. There's no pressure to become a member, so come and see what the buzz is all about. Our meetings are held the second Wednesday of the month, 7:30 to 9 a.m. See the show notes for more information and registration links.
Exiting your business is a big deal, both financially and emotionally. I'm John Marquet, Certified Exit Planning Advisor with TrustPoint. We help business owners transition smoothly on their terms. Our focus is on maximizing value, minimizing stress, and giving you confidence in what's next. Whether you're selling or passing the torch, we make the process seamless. Start planning today at trustpointinc.com. That's trustpointinc.com.
Hello, Poised for Exit listeners. We are here today with Heide Olson, CEO and founder of All-in-One Accounting. Heidi, welcome back to Poised for Exit.
Thank you so much, Julie. I'm thrilled to be here.
Thrilled to have you. I'm not overstating that at all. Your expertise is really valuable, but the fact that you are so client-centric and you have such a giver's mentality, it's no wonder to me that your company has grown so much because you've done it with such intelligence, with such passion, and beyond most companies actually what their motivation is, right? I don't know. I'm not just saying that. I really mean that. I'm really proud of you and I'm proud to know you.
Thank you, Julie. That means a lot. I think as leaders, the one thing, at least for me, is to really have a servant's heart. Like, we're here to serve. And at the end of the day, I think if you just focus on people and relationships and the fact that I'm able to do what I'm passionate about and work with amazing people, like, that really fills me up. But I'm here to serve. And so that's a theme that I try to hold really close all the time.
And it's evident, it's very evident in how you act and how you conduct business. So we told your story in the last session, so we're not going to tell it again, but we're going to tell stories, and stories are super important, right?
Absolutely.
And one of the things I think that tells a story about a business, especially when we're talking about preparing for an exit, is how they measure their success, right? What kind of measurements, what kind of metrics do they use? And so let's start off by just talking about some essentials when it comes to measuring KPIs, because when we measure those, it's so much easier and better for us, right, to make good decisions because we got good data to do it with.
Absolutely. And there are some key performance indicators that every business should track. And watching that progress over time is really important to tell that story, as you alluded to. But basics like net profit margin, gross margin, and EBITDA, I think, are 3 real big KPIs to keep an eye on. And it's interesting when I start talking with prospects, just even I like to ask this question, like, how do you make money? And have the entrepreneur tell me. And that's always very interesting. And to then couple that with like what KPIs we should be looking at and use that as an education and mentorship. But those are three ones that you really want to keep an eye on, but also customer acquisition cost,
Yes.
net promoter score,
Yes.
employee net promoter score. So how healthy is your company, right? Like it's not
Mhm.
just about revenue, gross margin, and net income and EBITDA, which are very important. And that's what your buyers are going to be looking at. But also like how happy is your team? And how happy are your clients? And do you have a customer concentration? Certainly, right? Like those things are, I think it's interesting when I've been involved with Exit, just they will slice and dice the information in so many ways. So you have to be really ready to have clean information, get ahead of the KPIs, but also be ready to get into a whole lot more and slice things and analyze them in different ways than you would think about. So clean information, consistent information, very important in the whole scheme of growing your business.
And your firm also works very hard to create good, compelling stories, right, for those potential buyers by creating financial reporting and financial statements that, like you said, tell a story, that are clean. So tell us a little bit about, what does clean actually mean?
Yeah. So for us, clean means you have a hard month end process. That means every balance sheet account or statement of financial position, if you're a nonprofit, is reconciled and you have a work paper to support it. If your balance sheet is accurate, that means your income statement is accurate, at least as a total. Like you might have some classification issues in there, but you will know if you're profitable, how much you are profitable, and the strength of your balance sheet. And that's a practice that we do with our clients every single month. We say essentially we're very much audit ready financials on a monthly basis. We're outside of doing independent verification of amounts, but like really making sure that those amounts are accurate. And the big things that really, can swing that is, work in progress and inventory and revenue recognition, some of those things that can get trickier
Yes.
and the kind of business that you're in. So that consistency, and also like, how are you doing against budget? That's a huge analytical tool that we should all be using, because then it's only looking at the things that are out of sync with your budget. And those are the things that you want to focus on. Those are your opportunities. Those are your actionable items in your financials that are going to give you the most, like, how can we make this better? How do we make this company more profitable? How do we drive EBITDA? Having those and those budget versus actual, and then that hard month end, which means you have accurate financials. And once you get that set up, Julie, it's not hard to do. You get the
Sure.
system set up, you have the right people in place, and then it just happens. Like the goal is to have that whole financial approach and accounting working as a well-oiled machine so that you don't have to think about it or worry about it or take up that headspace.
Right, exactly. Every month, like, oh, yeah. Well, we talked about before the show started about how we have worked with many owners over the years, both of us have, who have their hands in this kind of stuff, but they're not good at it.
Yeah, one of the things
Yeah.
that I'm really focused on now is energy, right? What gives you energy? What takes energy? And no one starts their business to do accounting, Julie, unless you're an accountant. Like, right? I mean,
Yeah.
it's just one of those things that as a business owner, you end up having to be responsible for and make sure runs right. I think it's actually the easiest thing to find someone else to help, partner with you and walk alongside, because at the end of the day, again, those accurate, timely financials, you can measure that, you can see how well you're doing. They should tell a story, right, of your business.
Yeah,
That heart and that story of your business told through the financials can be so powerful and so compelling. It attracts the right people to you, right? When you're
exactly.
telling that story.
Yes. And like you said, having someone else help with that, because so many times, especially when I was working, I don't work with the smaller companies as much as I used to, but they tend to have, the habit of wearing a lot of different hats and not necessarily relying on outside help like they could or should. And so they do things that they don't like to do, but they have to do.
Yep.
And what they could be doing is actually doing something that they love to do, that they're good at, like you said, the energy thing, right? Where they can actually generate revenue and make it be productive time.
Absolutely.
Right.
Or work with their teams,
And
right?
work
Work
with the
on new
team.
product offerings. Do the things in their business that only they can do. So
Yeah.
an exercise that actually is really helpful for me is delegate and elevate, and figuring out like what is the best use of my time in this business. And I would
Yeah.
actually encourage all leaders to do that, because I think there be some things that pop out that you're like, I'm not good at that and it drains my energy. I should not be doing that part. But let's be honest, accounting and finance is very intimate, right? It's very personal. And so finding someone to partner with to let that go can be very hard. And I understand that. You really get, under the hood with stuff when you get into people's financials. And I think sometimes there can be some shame or some like people are kind of embarrassed about where things are at. And it's like, just let that go,
Yes.
just find a partner who will get you set up, create this well-oiled machine, get you the information that you need, and then go sell and work with your team or go spend time with your family. Like that's just as important, right? Take the
Mhm.
day off, go buy the shoes, eat the cake. Like, this is the life we have. So let's make the most of it.
Yes. Well, and that's like I said at the beginning of the show, how much I appreciate and respect the work that you guys do. You're the perfect candidate for the listener out there who's wondering, like, oh man, should I offload this work? Yes.
Absolutely.
Emphatically, yes. Right.
Yes.
What about, say, for instance, if I'm an owner and I've got someone internally, like a controller, do you guys do any oversight work, like a second pair of eyes? I thought you probably did.
Absolutely.
I mean, I always recommend that. I've had clients over the years who have had one person internally. Like that person knows everything, right? They do it all and they don't. They make
Yeah.
mistakes. Nobody's watching. They turn things over to the CPA firm at the end of the year and the accountant's like, what in the world is going on here, right?
Yeah.
And so having a second pair of eyes is very important, especially if you're a company that's getting ready for a sale. So let's talk about that. If I'm a business owner and I suddenly decide that it's time to get out in the next 18 months, maybe something's happened. Maybe I've just had it and I'm just ready to
Yeah.
move on, right? It's not giving me energy anymore, like you talked about. What does that 90-day action plan look like to assess the current financial systems?
Yeah, well, again, let's make sure that all the building blocks and that strong foundation is built. So if you haven't implemented a hard month end, if you haven't looked at, are you running as efficiently as possible? I think that's the other thing, Julie, when you have a single person in a department, they don't have exposure to anything else, right? So
Yeah.
a lot of times when we start working with a new prospect or a new client, I'll say, hey, tell me about your process and tell me about these 10 steps from A to B. And, why do you do it like that? And the answer is always, that's the way we've always done it. And so this like always looking at how we can be more efficient, how do we leverage technology? It's
Yes.
interesting, Julie, 21 years ago, we drive to the client's office, log into their computer and do accounting. Now it's all about technology, applications, making sure everything connects. So there's this play about how efficiently can you get this done? And
Yes.
working with people who know the apps and the systems and the ways to do that.
Yes.
Because as you scale, you want to make it efficient too. You need the information. It's got to be very clear and tell that story, but you also need to continually be working on efficiencies in that department. And there is a lot happening, believe me, around automation and AI and how we leverage technology to do things better, faster, smarter. And what that really allows you to do is think more strategically about the business.
Right.
You've opened up some time and some capacity to think. With that single person in an organization, Julie, I always say, like, have someone come in and just do month end, regardless of who that person is, be part of that team, because also segregation of duties and internal controls. Not only could they be producing financials that are inaccurate, and believe me, bankers and shareholders and stakeholders don't like it when you give them internally generated financials and they look like one thing, and then you get to tax time and it looks different.
Yes.
That is not good
Not good at all. No. Well, acquirers don't like it either, right? That's a
No,
surefire
no.
way to chase them away, right?
Yeah. So having someone come in and just review, even if the internal person does the majority of the month end, like be their partner, be part of that team so that you can come in, be that set of eyes, make sure internal controls. I always say it's kind of like the cop on the side of the road, Julie. So when you head up Cedar every morning, I know there's a cop going to be sitting right by the Mall of America. Man, if I know someone from All One Accounting is coming in every month to look at my month end, if I even thought about stealing, I'm not going to. Because guess what? I'm also going to up my game. I'm going to make sure things are accurate. I'm going to make sure things are timely because I've got someone to be accountable to, right?
Yes.
Somebody who knows what they're looking at.
And plus encourage, teach, build up, right?
Absolutely.
Yeah.
Teach about new technologies. Hey, let's do this. Try this new app.
Yes.
Let's figure out how we can reduce 25 journal entries to 5. Like there are definitely opportunities for efficiency. And the other thing is with that internal person, if it's just them, who do they call when they have questions?
I know.
I want to be that part, like, hey, don't spin your wheels if you're struggling with something in QuickBooks Online or whatever app you're using, Sage, like just call us and we'll help you get through it. Like we're a help first. And I think partnering with people that just want to help get you through that is really powerful.
So let's switch gears just a little bit here, but we are talking about efficiency. And of course, you and I are both big fans of technology. What are some of the financially driven technology applications and what's the stack look like, especially if you're trying to prepare for a transition?
Yeah, I think it's really company and industry focused, but there are so many applications now that integrate so nicely with smaller companies are likely going to be using QuickBooks. Larger companies are going to be using, NetSuite and Sage and Dynamics and those sorts of things. But let's talk about QBO specifically. There are so many technologies now that integrate seamlessly with it that give you so much flexibility in terms of bill
Yes.
payments, in terms of employee expenses, in terms of inventory. Also, just making sure that your banking and your credit cards are linked and then setting all of that up to be as seamless as possible. Because now you can do rules. Like there's so much that you don't have to touch anymore if you set it up
Yes.
correctly. And it saves hundreds of hours for people, right? So
Yeah.
but a lot of people don't know how to do that or what technologies to use. So that's where, really coming in and having this. These are the 5 technologies I recommend to integrate with this and helping get them set up and running. And also how to reconcile them, Julie. They're not perfect.
Right.
Oh, there's always got to be this, yep, everything's syncing up and working, but like, how are we going to independently reconcile that to make sure that it's working right? So there are some of those steps that we want to take along the way to
Well,
that.
it sounds like you guys go in and do kind of like a discovery
Yeah.
exercise, right? Where okay, here's where we're at, ask a lot of questions, right? Is that
Yep.
fair to say?
Absolutely. So
Yeah.
in our process with the prospect is we actually analyze the financials, Julie. We take a look at them. We take a look at the balance sheet, the condition that's in, how much it is, but we also look at the transactional side. And so we're really able to tell a client, this is how much accounting work you have, this is how much controller work you have, and this is how much CFO work you have. And a lot of times there is an enormous disconnect between what we say the needs are and how they're currently staffed. And so then it gives us options. We can implement those technologies. We can mentor and train their internal team. We can walk alongside them to create this, this foundation, Julie, that's going to free people up to do what they do best, what their love is, what they're passionate about, which is why they started their businesses, right?
And well, exactly. And so you're not only taking things off of the plates of the leadership and the founders that, maybe only have somebody internally handling it for them, or maybe 2, but like walking alongside and coaching, but you're also creating value in the business. Right?
Absolutely.
Anytime that we're going to eliminate risk, which is what you're talking about, and eliminating any kind of murkiness or fogginess or uncertainty where a buyer would go, I have no idea what this means. Anytime any red flag like that is raised right out of the gate, the rest of the questions are going to be more and more stringent and they're going to have less trust. And that's not how we want our impression
Yeah,
to be.
absolutely. And a lot of times when we're doing financials for clients, we are really able to pinpoint and highlight that there's operational issues that are flowing through to the financials, right? So, for example, let's say that your margins are eroded in a month. Man, that could be overtime, that could be your materials changing costs very quickly. Can I tell a story about a client, Julie?
Please do.
We had a client years ago, it was a concrete company, and he had a fractional controller who was supposed to come in every month and close the books. Well, she got busy. She was an independent, she got busy. When we got called in, he hadn't had clean financials for about 8 months. We got him cleaned up and he was losing about $300,000 because of 2 things, Julie. Overtime, the cost of concrete had skyrocketed and he had not adjusted quickly enough. And had he had financials all those months, he could have made changes. He could have stopped the bleeding, but because he didn't have them and he didn't know, it just continued to bleed, and by the time we got in there and cleaned it up, like it wasn't too late, but he didn't have a good year and it was hard. It's hard to
Yeah.
dig out of that hole. If you can prevent digging the hole, that's for the best, right?
Right.
Identify it right away. Oh my gosh, we have an overtime issue. We have a material cost issue. We can pass that along. We got to manage the crew tighter. I mean, there are things that you can do operationally to fix those things or at least mitigate. It's not always a total fix, but at least try to control it.
Yeah.
So that's just one example of the importance of those month-end financials.
Yeah. Yeah, definitely. You know, you and I also have experienced the difference between a business owner who is running a lifestyle business and considers the business to be their baby, right?
Yeah.
Sometimes the baby's ugly and we have to try to make it cute again, right?
Yep.
Versus the business owner who's building an asset.
Yes.
So let's speak to that and speak to that mindset.
Yeah. I think when you're building for value in the future, you are looking at things like great financial output, right? So that's not only your results, but that's your systems, your process, your people, like everything's buttoned up. It's run. You know what, Julie? People want to buy a business that's well run.
Yes.
What does well run look like? Well, that's part of it. Having a great leadership team. Who are the leaders of this company? And can the founder not be central to that, right? You need to build a team. Can't be you. When you start a business, it's all about you, right? The founder, but you have to make a business that can excel and just thrive without you. So how do you do that? Takes time, takes energy.
Right.
Systems and processes, right? As leaders, keeping the business simple and those 5 leadership abilities, Julie: simplify, delegate, predict, systematize, and structure, right? How do we continue to do those things in the business? That creates process and systems where we can integrate more people and we can scale, right? And then sticky client relationships. That's where, if the founder is spending their time worrying about or working on accounting, go work on relationships with your clients.
Yes.
Go out there and do that and work with your team and look at that next big, bold people move that you need to make. Those are the things in the business that only the owner or the founder can do a lot of times.
A lot of times, correct.
Yeah.
And it's really tough to be creative and innovative when you're mired in the day to day that you really could be delegating to other people. And I know that it's difficult for a lot of owners to delegate because maybe they don't have the right people in the right seats.
Yeah.
And that's another whole issue and another topic we could discuss another time. But just suffice it to say, we know that it exists, and the foundation, of course, for the business is going to be the financial systems and how well run, financially it is, right?
Yeah.
Because that drives all the other decisions. Like,
Yeah.
I'm just thinking about the struggles that we're having with our church right now. And, it's just because numbers are down, and that means that, giving is down, and we have
Yeah.
tough decisions to make that we wouldn't
Yeah.
even have to be talking about, right?
Right. But aren't you thankful that you have the information?
Yes.
Versus if you didn't, then
Right.
that feels just awful and you don't really know what to do because,
I don't know. Yeah.
one of the other things that we've been talking a lot with clients about, Julie, is the financials themselves tell a story. But I'm actually encouraging all of our clients and friends of the firm to do like a management discussion and analysis every year, because you look back 10 years and sometimes it's hard to remember exactly what was happening and what was striving and pushing that
Yes.
performance. To have just a couple page summary of what was happening in the business that year.
Yeah. Yes.
So helpful. That will help tell that story, Julie. And I also think when you look back at those things over time, you're going to identify pivotal moments in your business. You're going to identify more opportunities. You're going to identify aha moments. And when someone does come and look at buying your business, that is a story, Julie.
Yeah.
I mean, think about like during COVID, or, I say
Yes.
like there's planned disruptions and there's unplanned disruptions in your business, but capturing those in some kind of narrative form to support those financials, I think can be so powerful. So take the time. It doesn't have to be fancy, but take the time to just say, hey, this is what was happening.
Yeah.
Business in the world this year. And then so you can go back and say, oh, that's what drove that 35% growth. Or
Yes.
that's when we had to totally pivot our business because of COVID. Or that's when we started doing EOS and look at what happened. So, man, it can be so powerful to have that and to really lean into it.
Well, and like you said, being able to tell the story for someone who's coming in who's not familiar with their business, but is interested in possibly, acquiring it, the more clear we can get and the more accurate we can get, the better off we're able to sell it for the multiple that we feel we deserve and have the best outcome.
Yeah. I mean, let me ask you a question, Julie. When you start working with somebody who's going to exit and their financials are just solid and they're buttoned up, like how much confidence does that give you in
Well,
your role?
it gives a ton of confidence because then I can focus on other things. I can focus on the intangibles, right?
Yes.
Because really, when we think about the value of an entity, most of the value is in the intangibles, like the people, the brand, the customer list,
Yep.
the things that you can't necessarily touch, like inventory and real estate and equipment, right? That's what the bank
Yes.
likes to lend on, but the value is in the intangibles. And so if the numbers are accurate, okay, great. Then what else can we do, right? To
Yeah.
really make this look like not just curb appeal, but we lift the hood up and wow,
Yeah.
this is a good investment.
Absolutely. The other thing I would mention is the whole realm of protecting your assets has really changed. I would say the last 5 years, 21 years ago, when I started this business out of my basement, was trying to protect my clients from their own team members, right? So embezzlement, thinking fraud, all those things.
Yes.
Now I'm trying to protect my clients from anybody who has internet, right?
Yeah.
So literally anybody who has an internet connection is a threat to you. And
Mm.
it is so daunting what is happening that we have to, and having good financials and segregation of duties, internal controls, that's how you protect. That's one of the ways you protect yourself. But it's
Yes.
also about your technology and your systems. And do you have two-factor authentication? And are you working with known apps that can be trusted, right? It's so heartbreaking for me, Julie, when I see this happen to clients because they've worked so
Mhm.
hard to get
Yes.
these assets and they can be gone in a second. So
Yes.
taking the precautions, setting yourself up for success and protecting your entity, protect your assets. And it's different. There's a whole lot that goes into that now versus, 20, 21 years ago. So
Yeah, or even a couple years ago.
yeah,
Yeah, it's really important to have that kind of a second pair of eyes to help with, okay, safety, security, especially on the financial side. I'm sure that's something that you guys have expertise in as well and can bring in, trusted partners that can help with securing officially, right?
absolutely. And so there's not
Wow.
only just the business that you have to protect, it's also the CEO, right? Like every CEO or top executive I know is like, you have to protect yourself. You have to lock down your credit scores. You have to monitor your identity. Like people, because we're public figures, they're just bombarding us, right? So there's even
Mhm.
special things I think that CEOs need to do to protect themselves and be
Mm.
very mindful that someone is trying to get at you. They're trying to get at your identity. They're trying to get into your phone, into your bank account, right? So how do you protect yourself against those things?
I think that's going to be our topic for next time you're on the show.
Great. I
All
look
right.
forward to it. Yeah.
Okay. We'll plan on it.
Awesome. Thank you.
Heidi, awesome as usual. Thank you so much for joining us today. And for our listeners out there, I would strongly encourage you to reach out to Heidi and her team at All-in-One Accounting. What have you got? 100 people now that work for you, or?
Yeah, 100, 110-ish. Yeah.
Yeah. So we're talking about a serious organization, people, and you have all kinds of industries that you help, including nonprofits, right?
Yes. So
Yeah.
nonprofit is a big pillar
Yes.
for us. And then entrepreneurs we love, and construction and manufacturing and professional services are really verticals that we are experts in. And Julie, one thing my team is amazing. Like
Yeah.
they are experts, they work really hard, they're efficient, and they care about people. And so it's really fun. It's really fun to watch this team shine in the work that we're doing for clients. I mean, that really fills me up and it's changing the world. And so we're going to keep going.
Yes. And you're all over the country too, which is awesome.
Yeah, that's really fun too. And we plan on doing more of that because we want to impact more entrepreneurs and nonprofits and make their lives better.
And you are. So thank you again for the work that you're doing. Thanks for being on the show. Make sure you join me again. We'll get it lined up. And thank you to our listeners and our sponsors. Please do share this episode and join us again next time.